Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is August 1st here and we have the market trading lower. Soybeans leading the charge, down 26.25 cents on the September contract. For that November contract, trading down 23.5. We had corn for September down 4.5 cents, with November trading down 4 3/4. Wheat in Chicago trading up here, up 4 cents, and December trading up 3 cents. Logan, what's the main reason we had soybeans trading down near the lows again?
I had a lot of calls into the office today, people wondering why we saw a lot of weakness out of soybeans, and really fundamentally not really a big story to go on. It seemed like some changes in the outlook for next week when looking at precipitation helped this market move lower, and really just seemed like a retracement from some of the gains in earlier the week. Keep an eye on the 1055 area on the November contract as we open up Sunday night. That's a key area of support. If we can get a trade below that, it's going to open the door to another move lower here, in my opinion, for the bean market. But take a look here at these maps provided by Planalytics. You can see that really most of the grain belt is expecting above average precipitation starting about Wednesday of next week, and that's going to really coincide with a continuation of the cooling trend that we've observed here really over the last week. Now, areas that people are going to be looking at in particular are these areas highlighted on the drought map. You can see that areas of South Dakota, Nebraska, Kansas, out into Missouri, Kentucky, into Indiana as well, are now in a moderate to severe drought. The most important area is obviously that area of Nebraska and South Dakota when we're looking at soybeans and corn. So keep an eye on precipitation landed there to kind of drive this bean market into next week. We'll help keep you posted on precipitation updates on Twitter. You can follow us over there at GrainTV. That's kind of what we saw here in the futures market for a relatively quiet day for news. Saw a lot of selling though in the bean complex. Over in the basis environment, Cody, we had a relatively quiet week for corn, not the same though for beans.
Absolutely. Soybeans ended up trading down on average across the U.S. when we're looking at in terms of basis, down 14 cents here. I think a major part of that move is the fact that we saw about 15 cents come out of the spread between September and November contracts. So a lot of this is probably spread. Now, of course, this also I'm calculating this basis off the November, so we're looking at spot prices based off of the November contract to calculate the basis, and really that's what we saw, a large movement there. The outperformer, the one that dropped the most actually, was soybean plants, trading down 16 cents in terms of basis. And it is very interesting actually when we swing over to corn, that was mostly unchanged, and despite the fact that we did move lower, it was down about a half penny. The areas that saw the most weakness was along the river, which traded down about 2 cents. Now, one thing to keep in mind is that the Gulf did improve here about 3.5 cents, but we did see kind of a stabilizing situation there and we did move a little bit higher here for barge rates along the river, so I think they kind of canceled each other out. All in all, one thing to note is that Minneapolis, St. Paul area is having very difficult time moving grain down the river here, as some locks up there have been closed simply because of some flooding and the silt damage there. They're having to dredge a good portion of the waterway, and it's causing a lot of frustration up there. I think what we'll see as a reaction to this and as a result of this is that as soon as these open back up, we're likely to see barge rates move a little bit higher here as those northern terminals try to lock in some of that barge supply.
Yeah, we'll have to see what that does to basis into next week, but certainly looking at the changes here for corn and soybeans, and as it relates to the futures market, not a kind week here for the U.S. producer when looking at cash price. We'll have to see if these markets can find some bottom here next week. Technically, these markets look like they're trading a little bit more sideways, and really the thing that's going to be driving the trade next week is expectations for the August USDA report. We're going to be getting that on the 12th, and we've heard some trade chatter about yield expectations for corn and soybeans, but I think that is really going to be the focus, and the emphasis on that is really going to be ramped up into the next week. As I said on soybeans when we open up Sunday night, keep an eye there on the low side of the range, 1055 for some direction. If you want to get live quotes at your home or office, visit us over at grainhedge.com. We have a great trading platform that's available on your desktop computer and syncs directly with your iPhone, iPad, Android, or tablet. If you have any questions about that, feel free to call our office. Number is 877-472-4607. Thanks a lot for joining us here on a Friday to wrap up the week. We'll see you back here on Monday.